Hi, I'm Yashwant. Welcome to the YASWANTH PALAGHAT show. So nowadays we are all talking about stock markets, cryptocurrencies, and investments a lot. But do you think it's a new topic? Stock market is not something which is very new, but the change in mindset of the people is completely new because of the lockdown and some adverse effects. Everyone is caring about their personal finances, and it comes the real value of stock market investing and whatever the investment. But today, like we have a guest with us, he's V Bhargav Kumar. He is a trainer of stock market investing, so he's also having a page in Instagram called Finsight 20. So he has trained more than 800 plus students so far. So hi Bargo, so nice to have you in my show. So how are you doing?
Yeah, Ashwant, hi. It's been a pleasure to be on your show. I'm doing great, man.
It's my
So, Ashwant,
cool.
you can hear me, right? You can hear me, right?
Yes,
Yeah,
Bargo,
yeah.
yeah,
Come on, yeah,
cool.
yeah. Come on.
So I introduced you a bit, so can you introduce more about yourself to our audience?
Yeah, Ashwant. Hi, guys.
Yeah.
This is Bhargav Kumar, and I'm the person who started a page called as Finsight 20, and I'm a stock market trainer. And previously, I have trained more than 800 plus students in my last 13 batches, and I'm also working for MNC company also. Yeah.
Yeah, cool. So the first question, while we're talking about stock markets or whatever the investment method, why do we need to invest? It's the basic thing that strikes in every individual's mind. So what, according to you, is the exact answer for that?
Yeah, Yashwant, the first and foremost, the
Mm.
sure shot answer for this is
Yeah,
inflation is our biggest enemy. It is an invisible enemy where we can't see the
yeah,
inflation. Okay, so we need to beat that inflation. That is our main motto. Okay, so for
yeah,
people who don't know what is inflation, okay, see it is a decreasing the purchase of the money. Okay, the purchasing power of the money
yeah,
due to the increase in the prices. Okay, whether it might be food or commodity, whatever the thing it might be. Okay, so for example, look at the value of 10,000 rupees before 10 years. Okay, look at the value of 10,000 rupees right now. And what could be the value of 10,000 rupees after 10 years? Okay, so the value of the money is constantly depreciating. So our main motto as an investors is to beat the inflation, first of all. And most of the Indians are investing in fixed deposits. Okay, in fixed deposits, after RBI repo rate and all, we are fetching around 4 to 5% like that. Okay, and I'm not saying
yeah,
people should not invest in fixed deposits. Okay, so people who are having an age more than 70 to 80s above that, okay, they will not be
yeah,
having ability to take the risk, okay, as much compared to the younger people. Okay, so they need to invest
yeah,
in fixed deposits. Okay, fine. But when coming on to the people who are aging between 20s and 30s, they are having an ability to take the risk. Okay, so I'm
yes,
just not telling them to take the risk entirely. Okay, they can take the calculated risk. Okay, and they can
yes.
classify the assets accordingly. Okay, so that's why in order to beat the inflation, we need to invest, and that's why the instruments like stock markets, mutual funds, gold, and all these things comes into the picture. Yeah.
True. That's great. So it's a nice, I mean, clear answer to the people who are thinking of how to invest and why do we need to invest. So once after we decide that, yeah, I want to invest somewhere. So especially in stock market, that is the reason why we are here. So where do we actually need to invest? I mean, not about the stocks and something, the prerequisites, like what's the interface or an application that we can go and invest. So can you tell more about it?
Yeah, Ashwant, the first thing what you need to have
Yeah.
in order to invest in stock market is the Demat account. So Demat account is the most important thing to invest in the stocks. Okay, so Demat accounts we have n number of brokers. For example, the main brokers were we have Zerodha, we have Upstox, we have Angel Broking. So these were the main
Yeah.
brokers. Okay, these were discounted brokers, and we have some conventional brokers as well. Okay, we have HDFC Securities, Kotak Securities, and these particular guys who came in the recent arena like Zerodha, or Upstox, or Angel Broking, these people have
Mm.
completely disrupted the industry. Okay, previously the
Yeah.
brokerages used to be very high, and if someone says that you'll be getting brokerage at zero cost, okay, and now they're not doing at
Mm.
zero, the delivery is at zero, this zero cost, but they used to say take it like a joke. Okay, but now it is possible.
Yeah.
Okay, these people have done some tremendous job. Okay, and after
Yeah.
opening the Demat account, there you can start investing in stock market or trading in stock market. Okay, but whereas coming on to the things like mutual funds, okay, you don't need
Yeah.
to have a Demat account. Okay, you can invest in some applications like you have Grow, which is doing extremely well. You have Coin, which is funded by Zerodha. Okay, you have ET Money. Okay, and you have Kuvera. So
Okay.
all these apps are doing extremely well. And the best part is the UI. The UI is very
Yeah.
easy. And if you ask me to choose one upon all these kind of investment activities, Zerodha is recommended because Zerodha's UI is very simple, and whatever the transactions you do in that particular stock, particular brokerage thing, you can easily read
Yeah.
it out. The ledger is so simple. Okay, so yeah.
Yeah. Cool. So, like for people who are watching, you can also find some of the links mentioned by Bargo in the description too. So, it's a basic step to have a Demat account before thinking about investing in stock markets. So, Bargo, it's good to hear from you all these things. So, like as you said, you train people under an Instagram page called Finsight20. So, what actually made you to become a stock market trainer? So, what is that real motivation behind it?
Ashwant, the real
Okay.
motivation which drive me to enter into this particular segment is the last year COVID crash. Okay, so last year
Yeah.
I was there in the market and I was investing in the market since 4.5 years. Okay, and my father
Yep.
was there in the market since 9.5 years. Okay, so we were following the
Oh,
stock market and we are investing stock market. But last year, whenever there's a huge COVID crash, we have seen very good fundamentally driven stocks at dirt cheap prices. Okay, at that time
okay.
we thought we should not run out of the market. Okay, we know that
Yeah.
one day or other these things will these things will come under to the normal position. So at that time we
Yeah.
thought to increase our positions as much as we can. Okay, and I
Yeah.
thought, why to confine this knowledge to myself? Okay, why not to spread this
Yeah.
knowledge to more people who are not having knowledge in this particular spectrum? Okay, so that is my
Yeah.
initial trigger. Okay, that's why I've started. Okay, and the second thing is I got a tremendous response from the audience as well. Okay, the people who are taking my course, I got a very good response. Okay, and they were doing extremely good. Okay, so and the third
Yeah.
point which I want to make sure is, see, the people who are having some active source of income, that is not necessary in this
Yeah.
society. Apart from the active sources, you need to have a passive income as well. Okay, in this kind of some
True.
unexpected events, that might be the survival factor. Okay, and I want to change
Yeah.
the perception of the people. See, if you go to your parents and if you say, I'm investing in stock market, I'm doing trading in stock market, definitely parents won't allow us because that comes under a negative vibe. Okay, so my
Mhm.
intention is I want to change the perspective. See, if you understand the company, if you follow the fundamentals, if you know that the company might grow in the upcoming years, then you can definitely go for the company. So this is what made me
Yeah.
to start the page. Yeah.
Cool. That's a great initiation actually.
Yeah.
So
Yeah.
why there is a huge boom in stock market? So like before asking this question, like I saw this trend going on from the last year. Like many of the people in my network started investing in stock market after watching Scam 1992 web series. But similarly, there are many incidents which I can say enforce people to go and invest in stock market. But why do you think there is a sudden boom from the last 2 years? Especially, I saw this growth from 2019 to the present situation. Before that, so
Yeah.
why you think the reason is? Yeah.
Yeah, Ashwant, the biggest driver for stock market is the liquidity. Okay, see, RBI
Yeah. Yeah.
RBI has decreased the interest rate. They have decreased the repo rates, which is a reflection of the interest rates and all. Okay, so that's why there is a
Yeah.
lot of money which is injected to the economy. The money is flowing in the market. Okay, so that's why
Yeah.
the investments in the stock markets were also increased. Okay, this is the first point.
Yeah.
And the second point is,
Yeah.
as we have RBI in our country, the America has a Federal Reserve in their country. Okay, and Fed Reserve is also
Yeah.
having zero interest rates. Okay, so there the money is flowing
Yes.
into the markets. Okay, as in our markets, the majority chunk is being invested by the foreign investors. Okay, so the money is flowing into the Indian companies as well. Okay, this is the second trigger.
True.
And the third trigger is, you have seen more than more than 15 to 16 million Demat accounts were opened in this particular period, last year financial year and this financial year. So these three are the
Yeah.
biggest drivers. Okay, and the fourth thing is the optimism. Okay, people know that this is not going to be the end. They are seeing the light at the end of the tunnel. Okay, and thanks to the
Yeah.
scientists who are working on the vaccines, thanks to the medical staff who are working so hard to end this pandemic. Okay, so people
Yeah.
just looking at the optimism and they were investing in this stock market. I think that is the biggest trigger for that. Yeah.
Cool. Cool. So like there is a concern for personal finance which is increasing day by day from since the lockdown
Yes.
started.
Yes.
So
Yes.
yeah, cool. So like recently we are hearing a lot about IPOs everywhere. So maybe Zomato is something which triggered this trend, but why is it so trending nowadays?
Yeah. See, first of all, I'll
What?
explain in a cut short what is an IPO. Okay. See,
Sure.
IPO
Yeah.
means, it's initial public offering. Okay. See,
Yeah.
you can't see Paytm in the stock market. You can't see Oyo in the stock market. You can't see Swiggy in the stock market. These companies were not there in stock market, but those companies were
Yeah.
there in those companies
Yeah.
were there in India. Okay. See, if, for
Cool.
example, if a company is not listed in the stock market, okay, if they want to raise funds from the people, so they do give the equity. Okay, in return they take the funds from the people. Okay, that
Yeah.
particular process is called as initial public offering. Okay, and we, after post pandemic, we have seen some beautiful IPOs which are getting into the markets. For example, Happiest Minds, Root Mobile, MTA Technologies, Burger King, Barbecue Nation, Zomato, all these things were doing
Yeah.
extremely well. Okay, and if you look at our Indian pipeline, what is the pipeline which is having startups? LIC is getting ready with the papers. Okay, LIC
Yeah.
could be the highest ever Indian IPO. So all people were waiting
Yeah.
for that, and Paytm, Nika, all these companies were also lined up with those events. Yes, so excited for that.
Yeah. Cool, cool. So, I mean, recently, like I have applied for many IPOs, but not every IPO that I have applied. So I'm not being alerted. This is not the only problem of me, but yeah, many were facing the same problem. So how actually we can enhance chances of getting IPOs?
See, Yashwant, this is the concern I've listened from many people. Okay, so they'll be applying
Mm.
for one IPO. Okay, and they'll be saying like, these IPOs are completely waste. We're not getting these IPOs. This is what many people might think. Okay, but
Yeah.
what we need to do is there is nothing called as a pro tip. Okay, there is a definite trigger
Okay.
you can get this IPO, because who are the people? What is the reason we are not getting IPOs? It's we, the people who created the competition. Okay, so
Yes.
before, I just mentioned that 15 million Demat accounts were there. So the competition is so high to get an IPO. But I'll just say you one particular thing. If you do that thing, you can easily enhance your probability. Just increase of the probability. That is, for example, if a person A is there and a person B is there. Okay. Uh, for example, if a person is investing for IPO for one lot, okay, why I took the figure 15,000? Because generally IPO's lot sizes are around 15,000 rupees. Okay, so if
Yeah.
he's investing 15,000 for one lot, okay, a person B is there, he is also investing for IPOs, he is also applying for IPOs, but he is having 30,000 rupees. Okay, so A is having an
Okay.
ability of one lot, B is having an ability of two lots. A might feel offended that B is having sort of advantage because he's having huge amount of money. Okay, but that is not the situation here. Whenever an IPO is oversubscribed, okay, nowadays every IPO is getting oversubscribed. It became a new normal. Okay, whenever
Yeah.
an IPO is oversubscribed, whether you apply one lot, 10 lots, or 8 lots, it is equivalent to just one lot. That's it. Okay, the program
Okay.
is designed in such a way that whenever it is oversubscribed, even if they pick your name, you will be getting a
Yeah.
single IPO. Okay, then what we need
Cool.
to do, what we need to change in order to get enhancement of his productivity. Okay, B can open a new Demat account which is linked to the other PAN card, maybe his father, mother,
Okay.
sister, or whatever thing it might be. Okay, he can
Okay.
apply from the other PAN card as well. Okay, so that with these ways, B can enhance the level of the productivity through these applying of IPOs. Yeah, this can be the next big thing. Yes.
Great, great. So
Yeah.
while talking about different stocks, the first thing that comes in many of the people's mind is EV segment, because electric
Yes.
vehicles are they seems to be sustainable and they seem to be the future. So what's your view on EV segment?
Yeah, that's a great question from your side, Shwant, because I term it as a sunrise industry, because uh,
Oh,
because the electric vehicle segment is completely booming in the Indian activities. Okay, in the world activities, if you consider the global horizon, it is growing like anything. Okay, see, when you are considering the EV segment, we should not concentrate only. We should not get confined only to the vehicle segment. First of all, so we do have
cool.
certain divisions on that. First of all, we need to have vehicle segment. We have infrastructure segment. We have battery segment. We have technological segment in this involved. Okay, first of all, talking
Okay.
about the vehicle segment, the two-wheeler segment is very very important in our perspective, because in India most penetration is done under the two-wheeler segment. If you look at Okinawa, if you look at Ather Energy, if you look at Ola Electric, they are doing some fantastic job. But these companies were not listed in stock markets. Okay, but there is company called as
Okay.
Greaves Cotton. They were doing extremely well. I think they have collaborated with Ather Energy. Okay, Hero Honda,
Okay.
Hero Motorcorp is doing. Sorry, it's not Hero Motorcorp. Sorry, it's not Hero Honda. It's Hero Motorcorp. Okay, they were doing some
Okay.
some good activities. Okay, when coming on to the two-wheeler activities, when coming on to the four-wheeler activities, really Tata Motors is doing extremely well. They were doing some fantastic job. Okay, recently the Tata Nexon is a big hit. That made the industry feel that yes, we need to have these kind of activities. Okay, so this is completely regarding the vehicle segment.
Yeah.
Now comes the battery segment. This battery segment is very 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 important in this particular electric vehicle segment, because if you consider
Yeah.
normal petrol cars or diesel cars, the most important core part is the engine. Okay, that's why the companies
Yeah.
were also concentrating on the engines. That's it. Okay, but that
Yeah.
there will be a tectonic shift now. The shift will be towards the battery segment. Okay, but there is a twist in the plot. Okay, before we used to import batteries from China. Okay, before you used to import batteries from China, but now this is not the situation. Okay, we need to get batteries, but we need to produce it by own. Then what we need to do? So what we need to have, we need
Copper.
to have
Yeah.
something called as, we need to call something called as lithium. Okay, but lithium
Sure.
is very, very rare in this world. Okay, then what we have to do? Then Indian government have seen where lithium is highly available. Okay, and they found that South American countries were completely blessed with this kind of reserves, with lithium reserves. If you see Brazil, if you see Chile, if you see Argentina, all these countries
Yeah.
were having, majoritarily they are having a lot of resources of lithium. Okay, so Indian government made an agreement with Argentina. Okay, and what Argentina is doing is they are trying to import the lithium to the India. Okay, that is a big breakthrough. Okay, but the story hasn't ended here. Okay, now the lithium is coming to the Indian countries. That's fine, but
Sure.
we need to convert that lithium into the battery technology. Here is the twist, another twist. Okay, then ISRO came into the picture. Okay, ISRO came into the picture. They have studied, they have experimented a lot, and now they came up with a solution. And now ISRO is having a technology where they can convert the lithium into the battery. Okay, they are having that lithium
Cool.
battery technology. Okay, and what ISRO have done is they picked some 10 companies of Indian companies. Okay,
Okay.
I think Amaraja is there in that list, and I think Exide Industries is not there in that list. Okay, and some other companies were there. Okay, the list is around 10 to 12 companies, and now ISRO is ready to do the technology transfer to these companies. Okay,
Yeah.
but the best part of the thing is ISRO is not charging any sort of royalty fee. That is the most important part. Okay, they were just charging a nominal fee, but they were not charging even royalty fee. That's fantastic.
Okay.
Okay, yeah, that's where the battery segment is very much important. And now coming on to this particular segment called as the infrastructure segment. In infrastructure segment, really Tatas were also doing extremely well. Okay, see the kind of chargers they were trying to install, they were doing some phenomenal job in this particular
Yeah.
the infrastructure segment also. Okay, in the battery segment they do have Tata Chemicals also. Okay, they're having a weapon called as a Tata Chemicals. Okay, and now talking
Yeah.
about the electric automotive activities. Okay, so I think the Tata Elxsi is also doing well. Okay, why I'm stressing more on Tata? Because they are creating a kind of synergy. Okay, so that is what the most important point. Okay, and
Cool.
if you can see like Hero, no, it's not Hero Honda, it's Maruti is also
Cool.
opening its own lithium plant, its own battery plant. So that's why the companies might not depend on the other companies such as Amaraja batteries or Exide batteries. They can create their own companies
Cool.
and they can produce the batteries as well. Yeah, and
Cool.
and
So
I
like
just
on
want to
a,
add
yeah, yeah.
one point I just want to add. I
Sure.
think the electric vehicle segment is valued at $5 billion right now. Okay, and
Oh.
it might go up to $50 billion in the upcoming years. I think the target is at 2025. The CAGR is around 47 to 48 percentage. Okay, so people can invest in this particular segment very well, because this is going to be the next big thing.
Cool.
Yeah.
Cool. So like on a bigger note, like whenever we see EV segment stock news and updates, we see something related to copper. So how
Yeah.
copper plays a role in, I mean, transforming this EV segment?
Ashwant, if you talk about copper, okay, see,
Yeah.
in normal cars, we used to have around 25 to 30 kgs of copper. Okay,
Yeah.
whenever we are going for electric vehicles, copper is the lifeline. Okay, we might use
Yeah.
around 65 to 70 kgs of copper. Okay, so the things might get tripled in case of the EV segment. So as the world is
Okay.
getting adapted to the EV segment, you can see the copper prices are rising. The copper is at all time high. Previously, it was at all
Yeah.
time high. Okay, and not only
Yeah.
confining to this electric vehicle segment, copper has been the usage was there in solar panels, it was there in windmills. So that's why copper is the commodity is in hot favorite recently. Yeah.
Yeah. Cool. So like, what do you think some of the leading stocks in EV segment?
Yeah, I've already mentioned that one. EV segment, as far my
Okay.
perspective is concerned, you can go for Tata's. Okay, the Tata's brands is extremely
Okay.
good and they're doing extremely well.
Okay.
And in the battery segment, you can go for Amaraja and Exide batteries. And these things, what I'm mentioning, are not stock recommendations. You have to
Okay.
go through and analyze the companies as well. Okay, so in the globally,
Sure.
Tesla is leading the stocks as well. Yeah.
Yeah. Cool. So after EV segment, the other thing where most of the people will tend to invest is IT segment, because it's something which is growing since 2 decades. So what's your take on IT segment?
IT segment, I think the revenues for IT segment are valued at around 190 billion. Okay, right now they are valued
Oh.
at 190 billion, and they tend to grow up to 350 billion in the upcoming years. That's a report by
Okay.
McKinsey, I think so. Okay, IT is doing extremely well. Okay, and if you see, I think we need to say thanks to demonetization. After completion of demonetization, that is the rise of the real IT boom. Sorry, not in IT boom, it's a disguised boom. Okay,
Yeah.
have you ever dreamt of our shopkeepers or vegetable vendors are accepting the phone pay, Google Pay, and activities? So this is completely a new change in the Indian economy aspects. If you can see the
Yeah.
transactions every month, there are billions of transactions which are going on in the digitalized manner. Okay, so IT is going to do wonders, and everyone in this country know that big data analysis, artificial intelligence, cloud computing, cyber security, these are going to be the next biggest triggers of the markets. But
Yeah.
are people are investing in stock markets? Are people investing in these IT segments? I think it's the biggest question mark. And I'll share you a biggest case study. Okay, so previously
Cool.
I used to have a friend. Okay, and he's working
Okay.
for Infosys at that point of time, and I think the discussion was in the last year. So I asked him. He's saying in such a way that in office he used to work around 5 to 6 hours out of 9 hours. Okay,
Hmm.
now after the work from home, he's working more than 12 to 13 hours. Okay, and he himself claiming that the productivity has been doubled. Okay, and I
Hmm.
told him, so you are saying that you are working in a company and you are saying that the productivity has increased, then go and invest in Infosys. He said that no, stock market is completely gambling. If we invest in stock market, we can lose the entire amount. I told, see, you are working for Infosys and you're not even trusting your own company which is working, and he's claiming that that productivity has increased. And a person who is doing just 6 to 7 hours of work increased of productivity. What about the complete employees? Okay, and he haven't invested. And I have seen the quarterly results of Infosys, that is Q1 results of Infosys last year. And after that, he told that no, I'm coming to the stock market and I'm going to invest in my company and I'm going to study the
Hmm.
businesses and I'm going to invest in the company. So this is what he told. Yeah, yeah, sure.
Cool. Cool. That's great thing. So, I mean, other thing is, what do you think are, I mean, two underpenetrated segments in the current stock market industry,
Okay, two
or in
underpenetrated
specifically in
segments.
India?
Okay,
Yeah.
okay,
Yeah.
okay. Ashwant, I think the underpenetrated segments, the first thing could be the insurance sector. Okay, the insurance
Okay.
sector in India is very, very underpenetrated. Okay, I think if I see the FY20 reports and all, life insurance is around 2.8 to 3% in the entire country. That's very, very low. Okay, and after
Yeah.
completion of this pandemic and all, slowly the awareness is getting increased. Okay, if you look at the developed nations such as Hong Kong and Taiwan, the penetration rate is around 20%. Okay, so even if it move from 3% to 6% in the upcoming years, you can get some very good returns in these insurance companies. Okay, and if you see in the
Cool.
financial year 2003 financial year, LIC had a lion share of more than 98%. Okay, now if you see, LIC is having a market share of around 60 to 65%, and these private companies are doing extremely well. They're increasing their market share like anything. They were growing like anything. So one can look at this invest in this insurance segment, so for some good returns. Okay, so this is my first segment, and the second segment could be definitely the AMC companies. Okay, so AMC
Yeah.
means it is asset management companies. Okay, so these companies, mutual funds. Okay, the funds which are under management, assets under management. Okay, and India is having a AUM of around 33 trillion. Okay, 33 lakh crores. Okay, if you consider the GDP to the AUM structure, it is very, very low in India. It is just only 12%. That's it. Okay, if you compare with the nations global average, it is around 65%. Okay, in India it's just
Okay.
12 to 15%. Okay, these might grow well because if you see the SIPs, the net inflows of mutual funds, it is growing month by month. Okay, so in the upcoming
Yeah.
years, definitely we can see a huge rise in this particular segment as well. Okay, but it all depends upon the
Cool.
SEBI, because the market regulations might be changing time to time. And the other important point which we need to see is the market. Okay, people will tend to come into the markets when the markets are doing extremely well. Okay, if the market just
Yeah.
tilted a bit, if it comes 300 400 points down, they will be running out of the market by claiming that market is completely waste, it is completely gambling. Okay, yeah, and these
Yeah.
are the two sectors which I'm completely concentrated on. And to the viewers,
Cool.
I just want to share one more segment which is very, very important, and I don't say this segment is completely under penetrated. Okay, this is specialty chemicals. Okay, specialty
Okay.
chemicals is one of the best segment. Okay, it might grow two-folded or three-folded in the upcoming years. In the 5 years, it is going to change like anything. Okay, recently there has been an article by Motilal Oswal as well. The article name is Unlocking the Genie. Okay, if anyone has the availability of reading the articles, they can go through the articles as well. They can see the specialty chemicals structure. It is doing extremely well. Yeah.
Cool. Maybe LIC's IPO will change the fortune of insurance stocks in the future.
Yeah. Yes, we can expect. We can
Cool.
expect. And there is a policy holder, theme is also there. Okay, policyholder scheme is
Okay.
also there in the IPO as well. Yeah, people who are having
Oh,
LSC policies can also have a special category in applying for LSC IPO. Yeah.
cool, cool. So, like, we have talked about, I mean, different stocks and different segments. And the other thing people will get it, what is the right time to invest? So, some will
Yes.
say, like, invest, you need to start investment at that day. Some stage start as early as possible. So, as a fresher, like, who just enter into an IT job or whatever the job it might be. So, what do you recommend to do with his first salary?
Okay. So Yashwant, what I want to say is, for example, if you have, let us consider
Cool.
1 lakh rupees. Okay. If you like the
Okay.
market, if you feel the market is so good, okay, do not invest the entire 1 lakh instantly at one go. Okay. So cut it into pieces. Okay. Invest net tranches. Like, first of all, you invest 30,000 rupees. Okay. And let us see if it grows, it's good. Okay. If at all, if there is another downturn, another crash in the market, then go for the second tranche as well. Okay. If you like the
Okay.
stock, if you invested your entire amount, if there is another crash, you might feel that you don't have a cash buffer. Okay, this is what many people do a mistake. Okay, so invest in tranches so that the things might get averaged in the long run. Okay, this is my first point. And second point, what fresher need to do with his first salary is, apart from these investing activities, he need to buy a insurance. So this is what I just want to say. Okay, many people were entering into the markets even if they are not having insurance. This is the first thing we have seen, the pandemic. Okay, life is completely uncertain. Before getting into the investment and
True.
all, first of all, make sure that you have an insurance, make sure your family is completely insured with health insurance and all, and make sure you have a term insurance and health insurance. Okay, and I just want to explain 2 minutes. I explain 2 minutes about term insurance. Okay, see, term
Cool.
insurance is very, very good. And the first thing I just want to say is, do not combine investment and insurance. Okay, these are completely different topics. But most of the people will be running after the blend of the topics. There are something like endowment plans, ULIP plans. Okay, they're getting very, very less base cover. Okay, so don't combine insurance and investment. So do it differently. We have an ability to do it differently. Okay, see, for example, my age is 23 years, for example. So I just want to ensure my term of around 50 years. Okay, so from
Yeah.
23 to 73, I just want to ensure this particular period. So if I see, I recommend, if we are getting around 5 lakh rupees of salary, 5 lakh rupees of salary, you need to take a term insurance of around 20 times of your salary. For example, I need to take
Okay.
1 crore of term insurance. Okay, and 1 crore
Okay.
looks like a very hefty amount. Okay, but the premium you need to pay for term insurance at my age, at 23 years, is around 8,000 to 9,000 rupees. That's it. Okay, per
Okay.
yearly you need to pay 8,000, 9,000, and this amount you need to pay for the next 50 years. Every year you need to pay that amount. And let us just, here
Okay.
is the point, important point. Now you're investing 9,000 rupees, and what would be the value of 9,000 rupees after 50 years? It is completely negligible, isn't it?
Yes.
So that's why people need to understand the term insurance. First of all, they need to make sure that everything is so excellent in the investment point of view. Okay, yeah. So no, sorry, insurance point of view, and then they can come into the
Cool.
investment activities. Yeah, come on.
Cool. A good analogy, Parko. So hope it
Yeah.
will be helpful for people who are watching this. So
Yes.
the other thing that I wanted to ask is, what do you think the major mistakes that many retailers, or I mean individuals who enter into the stock market as a beginner, will do?
The biggest mistakes, it might be, I've done this mistake.
Okay.
Okay, see, biggest
Okay.
mistakes might be, people will be choosing the penny stocks, or these
Mm.
small cap stocks. Okay, they might
Mm.
feel, if a stock is around 10 rupees or 20 rupees or 15 rupees, they might feel, so the stock is very, very undervalued, we need to go after this stock.
Yeah.
Okay, for example, if a stock is 5,000 rupees or 6,000 rupees, the retailers might think that this stock is very, very high valued, so they will not go for that kind of stocks. Okay, so do not look at the pricing. Okay, do not only look at the pricing. You need to understand what is ROE, ROC, P values, all this stuff is there.
Mm.
Okay, in my course I used to explain all this stuff. Okay, so if they have the opportunity, they can learn all these things. Okay, so they need to go through all this stuff, and they need to get to the conclusion that yes, now this company is at the right point. So you should not expose your portfolio to the penny stocks and small cap stocks. Exposing more
True.
of your portfolio to the small cap stocks is completely dangerous. Okay, they need to have exposure of large cap stocks and mid cap stocks. Okay, because large cap
True.
stocks are completely grown and they have a strong business. If any sort of uncertainty happens, they can sustain. But these small cap stocks,
Yeah.
we don't know what's going to happen. So that's why they need to plan accordingly. So this will be the first mistake. And second mistake could be, they should come into the market by not believing in such a way that they can be billionaires or they can be trillionaires. Okay, Stock market is a place where you have to use it very, very delicately. Okay, you should earn money somewhere else and you should invest in order to beat the inflation. And if you have some good ideology, you can invest in some very good companies. But some people might think they'll enter to the stock market with 10,000 rupees and they want immediate triggers. They just want to become 50,000, 60,000. They'll be buying a home for 20 years. They'll be buying gold for 10 years, but they'll be buying stocks for 10 minutes. This is not at all right. Okay, for example, if you want to make an ice cream, you'll keep that ice cream in a freezer. If you keep on checking the ice cream is getting shaped out or not, the ice cream will not be in a perfect shape, right? It will melt down, obviously.
Yes,
So
true.
that's what happens with the investment. Okay, so they need to plan accordingly. Okay, so they need to wait for the longer term so that they can fetch some very, very good returns. So these are the mistakes most of the retailers might do. Yeah.
Cool. Sometimes, like, I also feel like by watching most of the people feel like more shares is equal to more value. I think
Yeah,
it's
no,
a
no,
wrong
no.
thing.
You should go for the quality, but not for the quantity. For example, in
Cool.
previous, in our childhood days, we used to have piggy banks. Okay, if you have two piggy banks, if you are putting some 5 rupee coin or 2 rupee coin, the piggy bank is having a lot of weight. But in the other piggy bank, if you keep 500 rupees note or 1,000 rupee note, the piggy bank is completely lightweighted. Okay, you might feel that the weighted piggy bank is so worthy. No, the answer is absolutely no. Okay, you need to look
Cool.
at the ultimate segment. Okay, and why the stock market is having some negative vibes is just because, see, many retailers are coming into the stock market. Okay, majority of the people are not having knowledge on stock market. Okay, so that's why my intention is to increase the awareness. Okay, so if at all they're having
Cool.
with less knowledge, most of the people are thinking that if they the last year we are having a very, very big bull run. Okay, and it doesn't mean that the next years are also going to be the same. Okay, so we have seen a very good bull run, and after that it might consolidate for a while, and then we can grow once again. Okay, so the people might think, the retailers might think, so the stock market is this way. If we invest 100 rupees, it might become 200. If we invest 200, it might become 400. No, the stock market is completely of ups and downs and ups and downs. Okay, who had a holding power and who had a patience, then you can sustain markets. Yeah.
Great. So one direct question, like, what do you think the difference between mutual funds versus stocks?
Okay, fine. So if you consider stocks, okay, so you can invest by your own. Okay, I've told the
Yeah.
details of the brokerages, right? So you can invest by your own.
Yeah.
If you have knowledge, if you have awareness and all, you can invest you by your own. No other person is needed. But in case of mutual funds, for example, if you don't have time, if you don't have awareness, but you want to invest, you can assign this particular responsibility to a certified professional. Okay, so these are called as fund managers. So if you transfer this fund, you'll be getting a lot of diversification, and they will be managing your fund. For that, they'll be charging some expenses also. So that's the difference between stocks and mutual funds. In stocks, you can be your own boss. Okay, but if you don't have time, then I recommend people they can go for the mutual fund activities. And one thing which I want to say is, people have to do diversification. In mutual funds, you might find diversification, but retailers, if they like, for example, Adani stocks, they'll go for Adani stocks. Every Adani Enterprises, Adani Power, Adani Ports, and all Adani stuff. Okay, if something goes wrong, recently we have seen the Suchita Dalal tweet. After that tweet,
Yeah.
completely Adani stocks were completely, they were in red. Okay, your entire portfolio might be in negative point. So we need to diversify our portfolios in such a way that if something goes wrong, one sector might go down, but the other sector can rescue. Okay, in the last year pandemic, if you have pharma stocks and if you have banking stocks might go down, but the pharma stocks might rescue. But if you
Yeah.
completely go towards one particular point, it might be the negative point. So my
Hmm.
perspective is, in your portfolio, you need to have at least 3 to 4 sectors. That would be nice. Okay, 25 to 30
Cool.
percentage of the allocation for one sector is needed at least. Okay, it should not be more than 35 to 40 percentage. Okay, for single stock, it should not be more than 10 to 12 percentage. Okay, if you follow these kind of techniques, you can have some good diversification. Okay, yeah.
Cool. That's a great thing. So this is also some direct question kind of thing, investing versus trading. So like I have an example for this. Like there are many people like whom I know, like they just invest as they just thought that they're investing on a particular company, and if it goes down suddenly, they will, I can say, they will sell their stocks, and they feel like the stock is going good, and I can say I'm comfortable with the stock market. The same person, if he invested on the same stock, and if it goes down, ultimately they, I can say, they sell, and they sell in panic, and they feel like stock market is something which is trash, so we cannot trust stock market. So then like initial days, like I thought like stock market is a risky one, but later I understood the difference between investing versus trading. So like I want to hear it from you. What's the difference
Yeah.
between investing and trading?
See, Yashwant, the biggest misconception of stock market is people might think if the stock market is growing, you are getting a lot of
Yeah,
money. If stock market is going down, you're losing a lot of money. For example, if I invested 10 lakh rupees, okay, if the stock market is having a very good bull run, so all my friends will be calling me and they'll be saying like, Bhargav, you are earning like anything. If something goes wrong in the stock market, and the same people will be calling me and they'll be saying like, you are losing a lot of money. This is absolutely wrong. Okay, see, if you are, you can gain whenever the market is growing, and you can even gain when the market is falling also. I'll give an example for that.
yeah,
For example, if you have an investment of 25 lakhs and you opened a supermarket, and after opening the supermarket you lost around 15 lakhs within 3 months, for example, and you lost 15 lakhs means someone in the same economy gained that 15
yeah,
lakhs, isn't it? So you are losing,
yes,
someone is gaining. And you can see in the last financial years, okay, whenever the COVID, there is a crash on that point of time, you can see the big headlines. 5 lakh crores got evaporated, 10 lakh crores got evaporated in 10 minutes. Where the money is
yeah,
going, it is not getting evaporated, it is moving from
yeah,
one place to the other place. So that's where we need to study, so how we can take advantage of the market even if it is going down. So in options and futures, we do have certain segments, like we have equity
yeah,
segment, we have option segment, we have future segment. By using F&O segment like futures and option segment, we can hedge our positions whenever the market is falling down. Okay, and the other thing what retailers might go wrong is, whenever the market is so rising, you need to be cautious, you need to be very very
mm,
cautious whenever the market is so falling, and that will be a good opportunity to invest. But we people do
yeah.
it in a wrong way. Okay, when the
Reverse way.
market is rising, when if it is moving towards the peak point, we'll buy there.
They will
Whenever it
purchase.
is going
Yeah,
down, we'll sell in a panic. But don't you think that a bad quarter for TCS or Infosys or Reliance or Asian Paints might change the dynamics of the company? No, this is not. Okay, you need to have that holding power. Okay, when coming on to the trading and investing activities, people need to, it's like a medicine. Okay, whenever you have something wrong with your body, you have to take the medicine. You keep on taking the medicines, that might be a negative impact. Okay, so trading should be done in a very strict and occasional manner. Okay, if you feel that the odds are completely not against you, and if you feel that something is going to happen in a very extreme way, then you go for the trading activities. Okay, if you're not sure, then you need to be get rid of the market. Okay, investing, it's not like that. You can be very very peaceful. Okay, if the market is rising, it's okay. If the market is falling, it is also okay. I feel so happy when the market is falling, because I can get the
mhm,
stocks at very very cheaper prices.
yeah,
Okay, now I'm getting a lot of jealousy because the market is at inching towards 16,000, and my stocks are all flying in the air, but I'm not able to sell because I don't want to do the profit booking areas. Okay, so if the market is falling, then I can invest more and more, so that in the long term you can get some very good profits. Yeah.
cool. So like if the market is rising, think like a bear, and if market is falling,
Yeah.
think like a bull.
Yes. Yes.
Cool.
Yes. 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 Yes.
So like yeah, as we discussed in the beginning, like I can say you manage a course on stock
Yes.
market
Yes.
investing under FinSight 20. So any
Yes.
prerequisite to join your course?
Prerequisites to join my course is just one thing. They need to have
Okay.
curiosity to know about stock market. That's it. Okay. So
Okay.
my intention is to teach people regarding stock markets from the basics. Okay. Even if they
Okay.
have no knowledge, nothing, no worries. Okay. I'll be starting from the scratch. Okay. So that they'll be getting
Okay.
all the kind of activities. And the biggest positive thing in my course is they can have the live interaction. Okay. So
Okay.
when I'm teaching something, they have any sort of doubt, okay, they can
Yeah.
ask for other time. Okay, if they can ask me that, repeat once again, I'll do that. Okay, if they're having any sort
Yeah.
of doubts, they can contact me after the class. Okay, whenever you have a
Okay.
person traveling in parallel with you, you'll feel so
Mhm.
confident. Okay, whenever you have any sort of
Yes.
doubts, you can ask directly. Okay, and my course is starting on August 2nd. Okay, so coming Monday
Okay.
I'm going to start my next batch. Okay, weekdays batch, and my weekends batch on
Cool.
August 9th. Yeah.
Cool. So like I will add those all those details in the description. You will find out once after this video ends.
Sure, sure,
And
sure.
also Barco, like we have got some not some many questions. So
Okay.
we will see. Satvik is asking, how do we know that market is going crash?
How do we know that the market is going crash? Okay, so we will be getting some activities which are so abnormal. Okay, if for example, if the market, if for example, let us consider, many people might be thinking in this way: if something goes wrong in India, then only the Indian markets react. No, this is not correct. They need to have an update of the global markets as well. Okay, if something, see, right now you are listening frequently that in America the cases were rising. Okay, the in China the cases were rising. Okay, at this point of time you need to be very very cautious. Okay, because if in this point of time, if something goes wrong, because we are at very very high valuations, okay, if something goes wrong, you can see a big crash. Okay, so these would be the some abnormal activity. If you feel something is so abnormal, okay, then you need to be very very careful regarding that aspects. Yeah.
Cool. So another question we got is, which is the best app to buy shares? I think you already discussed it, like
Yes,
Zerodha,
yes, yes.
Upstox, and
Yeah.
there are a few. You can find some more info in the description too. How much money should we invest for a share? 100 to 20 rupees.
Sorry.
I think he's asking about what the money that we think is the best to start investment. I think is what he's
See,
asking.
in investment you can start from even 10 rupees also. Okay, you can even start from 5 rupees also, but you need to look at the return on investment. Okay, see, if you are investing 100 rupees and if you are getting a profit of 10 rupees, here the return on investment is 10 percentage. Okay, if I'm investing 1 lakh rupees and if I'm getting a profit of 5,000 rupees, the return on investment is just 5 percentage. Okay, so you should not look at the profitability, you should look at the return on investment. That plays a crucial role. Yeah.
Cool. Can you please tell about small case?
Okay, so small case is getting a lot of momentum in these recent activities. Okay, so as I mentioned about mutual funds and all aspects. Okay, so in mutual funds, some ex person, some ex professional will be handling our baskets as well. So if you want to change
Okay.
something, you can't do it by your own. Okay, in small case, what you can do is you can create your own basket. Okay, that is the most important point. Okay, so
Okay.
you can give the weightage accordingly, you can customize the weightages accordingly. And the most important part is, in small cases they have given predefinedly they have created some small cases. For example, Yashwant is looking for pharma sector, you will be having the pharma stuff. Yashwant is looking for EV sector, you will be having the EV stuff. Okay, so you can customize accordingly. And if you want to, for example, if my sister is working somewhere, okay, if she is saying like she want to invest 30,000 rupees. Okay, now I can create a small case for her. Okay, I can create a small case. If I just send link to her, this small case will be connecting to all your Demat accounts. Okay, if you get connected to the Demat accounts, you can invest directly. Okay, so the small case is fantastic, it's doing some tremendous job. Yeah.
Cool. So what is ROC and ROE?
ROE is return on equity. Okay, and ROCE is return on capital employed. Okay, see, you should more concentrate on ROE. Okay, whenever you get confused, if at all ROE does not consider the debt activities. Okay, if at all a company is having a lot of debt, the ROE will not consider the debt. Okay, if you consider ROCE, then the company will be taking the consideration of the debt as well, so that you will get to know the correct profitability of the company and how it is performing. Yeah. And I think if a company is getting 12 percentage and 13 percentage of ROE, it's good actually. Okay, if it is getting very very low, it's not good thing. And you need to know why the company is getting very low ROE. Okay, first thing is, why I
Okay.
just want to mention, please do not look at the numbers. Don't take decisions by looking only at the numbers. If you want to filter the stocks just looking at the numbers, computers can do a beautiful job better than us. Okay, investing is completely an art. Okay, we need to apply some ethics and all. Okay, for example, if someone is saying Zomato is completely loss making company, see, first of all, Zomato is not running after profits, they were running after
Yeah.
something which is called as the data. The data is the 21st century oil. Okay, if someone is saying credit is doing completely credit is completely burning the cash, it is a completely loss making company. See, credit is not running after the profits, they're running after something which is called as data. Okay, they have the most important data. With that data, they can start disrupting the industry. Look at the Amazon is in loss for many years, and they have started disrupting the industries, and they are leading the industry in that way. Yeah.
Cool. So, and it is a direct question for you. Seems I get it that you are not willing to book profits, but waiting for
Yeah.
long term. What is long
Hmm.
term in your opinion? now that you are
Hmm.
23 years old?
See, first of all, holding blindly is not at all a good thing. Okay, so if you feel something is not doing well, okay, something is not going well with the company, then you can book the profits. And the most important driver will be the management. Okay, even if you give a Ferrari car and the driver is a worst guy, it's completely the worst guy, and he can completely destroy the Ferrari car. Okay, even if the car condition is very very bad, and if you have a very good driver, he can drive pretty well, he can take to the destination pretty well. And you should look at the management, you should look at the management commentary, you should look at the quarterly results, you should look at whether the company is doing well or not. Okay, it is growing as per the expectations or not. Okay, for example, look at the S Bank. Okay, for example, if I'm a long term guy, I bought S Bank at 70 rupees. I know the management is doing some stupendous, so some very very wrong activities. Okay, if it is going down down down, I'm just catching the falling knife at that point. Look at the Kingfisher Airlines. The stock is falling, and then the promoter Vijay Mallya is doing lavish kind of parties in the Goa. And how can you trust the management? So you should look at the management. You should look at the you should look at the cycle of the like segment also. Now the commodity segments are on beautiful rise. Okay, if you think it is a profit booking zone, you have to book it. Okay, if you think growth is there, then you have to hold it. Yeah.
Cool. It's great answer. So yeah, we have got many other questions, but yeah, for those who are watching, if you have any questions, please write down in the comments even after this session, and like IO Bargo will reply to your comments. And yeah, Bargo, like I feel this is something very value added session for all the people who are watching. So also, like I feel I mean, most of the times, like I do talk about personal finance and passive income in most of my videos. So most of my subscribers are also like expecting some of these kind of videos, and like many were asking me about a complete dedicated video about stock market. But I feel like you are the correct person for this, and of course I feel like everyone who watching this will get benefit out of this session especially. So thank you once again for, I mean, joining in my show and giving your, I can say, valuable inputs to all our audience.
Yeah, thanks Ashwant. I just want to convey this kind of information to the
Cool.
audience as well. Okay, what I just want to make sure is see the cost of living is increasing. Okay, you can't rely on active kind of sources. Okay, they need to go and invest. Okay, if you started investing, and that's the first point of success. Okay, you should not
Yeah,
degrow your investment, you should grow your investment. And investing is not at all a rocket science, it is all about keen observation. Whatever things you can see, whatever business you can understand, just go for it, just go and invest. Even my mother is helping me in some kind of activities. Whenever I say that I'm going to buy Stovecraft, she's saying like, no, Stovecraft products were not good, go for the TTK Prestige. Okay, so she's asking me to buy the ITC shares because Ashirvad Ata is doing extremely well. So such kind of things, whatever the business you know and you can understand, just go for it. That's it. Yeah.
cool. So yeah, thanks. We'll wind up now. So thanks once
Yeah.
again. It's pleasure hosting you. So
Yeah.
yeah, like I will add all the links that I mentioned in the description. Also the Instagram profile of Bhargav, so you can directly connect with him there. So yeah, thank you once again for joining in
Thank
the
you,
live
Ashwant.
session, everyone. Yeah, thanks, Bhargav.
Thank you. Thank you. Yeah.